Hey everybody, this is Paul doing a quick little dividend video here. It is 5:01 p.m. on May 31st. Market is closed. So I waited to do this video until the end of the day, and I'm probably gonna have to do this until the Fed starts cutting rates because the swings in the market are just all over the place. Um, just as you can obviously see today, just in the background here, you know, market was down for most of the day. I mean, at a low point, it was at 51.98, and then it ended it ended at 52.77. I mean, this is that's certainly a swing. Let's put it like that. Like, it was down 30 points, and I was up 42, and then the Dow is the same. If you look at the Dow, 38,164, and then now it's at 38,686. So I guess we have to figure out the explanation of why, what's going on. Um, so the best explanation I can give you is the market is in what like a pretty much a holding pattern. It's in the same holding pattern that it's been stuck in. So I guess the biggest thing that came out today was the PCE target came in literally exactly where you expected. Now here's the problem: 2% target is down here. The core PCE is kind of trending down, as you can see, but this graph does kind of give you a general idea of like what it's what it's like. I think if the Fed can get below 2.5, they might just call it a day. But now, how long do they want to hold rates? So that's what this whole discussion was about right here. Or that's why the whole market was doing whatever it was doing for the last 2 days. Is Kashkari and just different Fed members came out and basically said, well, we have different things like this. Continuing claims are not spiking. They went up, they're completely flat. Um, you know, core PCE looks like it's coming down, but it's going to take a while. So why is there any rush to cut in 2024? Well, that immediately, takes the market and just kind of turns it on its head on as like what they're expecting in terms of like just different cuts. Like you can go from this situation here, which this is just a chart that shows like just different overbought and oversold levels. You can go from like completely oversold to overbought on one Fed member talking about rate cuts. It's just how it works. But then you get just different things like this where it's obvious that disinflation is in the pipeline, like just disinflation is happening because like somebody tried to link this graph and say it was a bad thing. Well, yeah, over quarter or whatever, it's up. But as you notice, that's always what tends to happen. You have this, then you have that, then you have this jump right here, and you're having kind of similar things. But the trend from there to there is obviously down. So the price is paid part of it, but this thing is really getting affected. Like the different things that we have going on in our economy are getting affected by how other economies around the world are responding to effectively their recessions. So China, for example, is throwing everything at the wall to get out of their recession situation that they're stuck in. But they're not in a recession. But I mean, it's like they're getting out to try and get out of their slowdown that they got going on to stimulate their consumers. In the U.S., we have like a presidential election going on, so there's so much noise in the system right now. Nobody's talking about like rent anymore, which is the weird thing. They're all talking about like auto insurance and homeowners insurance, which is just insane to me. But like, it's these things that I think people have been talking about forever as being like big parts of like inflation in their lives, and then all of a sudden everybody on the Wall Street cares about that. They never cared about that before, which is really weird. So as you can see right now, I have different breakdowns of like just what's making up these different things that are going on in our economy right now. Obviously, the biggest thing is inflation and rent. It's still taking forever to come through, to go lower. It is going lower, but it's taking a second. So as you can see, just different things like housing and utilities. It's just making a much smaller piece of it than it was before. Financial services is insurance. There's just different things that are in here. So as it stands right now, here's where the account is. This is just after today because I had 300, 350 something worth of dividends pay out today. And then speaking of dividends, so that's what's going on. Here's another thing on this video here is BST effectively doubled their dividend. It went from like 10 cents a share up to 21 cents. And it's going to vary based on, so this number is actually going to start varying way more based on this stock price right here. So they switched from picking a price and then paying it out for the entire year to now it rotates every month based on the stock price. So the stock price is just basically going up in a straight line. Um, I'm sure if I pulled out a picture of my account from say like a month ago, this was at 17 and now it's at 1971. So as soon as they announced this, everybody piled in. So, and that's because they're in what's called a proxy battle. There's a fund literally trying to take over this fund from BlackRock. So they're fighting over this fund right here, and they're trying to get voters to vote for towards BlackRock, saying, "Hey, look, we'll reward you. You know, we'll change how we reward you guys," and that's what's going on. So, and then the other guys are saying, "No, we can manage this better. We can get you better returns and a better stock price and all that stuff." So this is what you get. So BlackRock effectively is trying to buy votes. I'm fine with it because I'm in the middle of it and I own a bunch of shares. So this went from paying out 40 a month all of a sudden up to 80, up to 82. I think last night it paid out 35 in just my Fidelity account. So last night it paid out 35. That's the last month it's going to do that. Next month it should pay out 82 if the little thing is right. So as you can see, all of a sudden I'm up 422 in that, and that's like close to 5% in a month, which is just amazing. Obviously, also as you can tell, I have a massive cash balance right now. Um, that's pretty much from O. I am. I guess I'll put this out as a warning. When it comes to O and anything that's related to real estate right now, like REITs, I'm kind of iffy on having a lot of money exposed to them. So I ended up being right. O completely sold off down into from 54 down to about 51, and then now it's rallied back in the last 2 days based on rates. But I think as we go into this Fed meeting and then they push out higher for longer. So like if so, for example, if December, which is now priced in all of a sudden, because one, it's different Fed members are speaking, so it's going to swing around. But as it actually does get pushed out, I think things like O are going to suffer. And then another problem we have is that around O, so even though O is an extremely solid company, it's surrounded by a bunch of people that own a bunch of crap that is worthless. So I think if one of the bigger REITs out there, CRE companies, do go down, um, I think the market is going to throw out the good with the bad. And O is not in a good place for that because they do have obviously exposure to CRE real estate. That's what their entire company is, really. They rent real estate to very well capitalized companies, but I think they're going to get caught up in any kind of sell off in real estate. It's commercial real estate specifically. So I think what my current plan is, and this is different from my last video, is I'm gonna probably build this position up to about 20,000, I want to say, and that would make it more than enough to be able to basically pay off my car payment, which is down here. This is actually lower than my last video, by the way. Actually, they called me back and gave me a lower rate, which was really nice. So I'm still going to try and do like little extra amounts towards my credit card and that kind of stuff. I've taken this from 10,000 down to 7,000 by selling my stake in this, and I'm still, just to give you a general idea how crazy this month has been, I'm still up this much for the month. Now, if you can see, and then I'll update this while I'm doing this video, so you can see I've added a tremendous amount of debt in a month. And that's pretty much from the credit card down payment that I did, and then which has been paid back, and then the car itself, obviously. So definitely got just different things going on. But you trying to put little notes here to myself so I can remember this in a few years exactly what craziness I did here. So you can kind of see 2,500 sold of HYG to cover the taxes on the Prius. and then that's how much I Prius, and then I had to pay taxes on the Prius too. By the way, that was real fun because apparently I never paid taxes when I bought the thing, so that's real fun. So it's just all kinds of craziness that happened, and then I actually sold the Prius for 3,500. So you see, it's just different things that went on this month. So it's very hard to track as to what's actually going on since literally my last video. But overall, it's been an extremely good month, and just 700, almost 800 of this right here alone by itself is just from today alone. So I think the current plan is to definitely try and focus on the credit card still, try and get that number down so I can bring down this payment, obviously, and then try and just go for the 100,000. I think it's still possible to get the 100,000. Um, I don't want to make this video too crazy long, but I think it's still possible to get the 100,000 because I was right at about 34 last year in gig work. So if I pull another 20K, you know, that'll get me there, and then in market gains alone and dividends and all that stuff. So even though majority of my dividends right now, especially these and that, are devoted to my car payment. So depending on when my videos fall, you'll see just swings in this balance down here by like say $500. If that happens, that's because incoming, outgoing money kind of thing. So it'll go up by 500 or so, and then it'll come back down. So that is kind of where we're at. So and that's if I might end up making an extra payment of like 2,000 towards this or something. I don't know. Um, we'll have to see how it goes. I know for sure, like once the Fed actually does say they're going to cut rates, like BBN, there's just different things that are just straight up going to take off. So, but the market will sniff that out and price it in very early. So if it's going to be January or whatever, February next year is the first cut, they will have it priced in by December. We will have a really nice December in the market. So, but we have to see how it goes, right? Like presidential elections coming up and all, there's insanity there. So I don't know. Let me know what you think. Like I said, current goals get to 100,000. That's where I'm kind of focused at right now. So let me, throw a thing in the comments. Thank y'all so much for watching. Y'all have a nice day.